What's going on, people? Happy New Year. I didn't make a video probably since Christmas. I did go on a vacation. I went to Disney World, spent some money. Took some trades last week. We'll go over them, talk about the ones that stopped out, ones I'm still in. Kind of go from there. I think the last time we talked, when was the last time I did a video? Probably had to be after FMOC. I want to say like this 23rd. So I kind of talked about, on SPY, the issue was, this large candle right through the EMA. So these shaded lines that you see are your 9 and your 20 EMA. I mostly have used the 10 and the 20. But I decided to switch it back up and go to the 9 EMA and the 20 EMA. And still use my 50 SMA and 200 SMA. But the issue that I mentioned was that the problem was that we just wedge dropped through these EMAs, and we still haven't filled this entire election gap. And what we could have seen was a retracement where we flag and then we drop again. Now, to take this, it wasn't really a setup right here. Like, I know some people are saying like, well, you do have this wedge, perhaps, that you can call out on the daily, and you kind of see we kind of overshot it here, but really it's because I'm using a line chart to kind of mark out those levels. And we just had that one little overshoot there. We did kind of get that rejection back up here at this rising wedge, kind of retesting it. But it would have been a much better play. Like, I don't think this is an A+ setup to take it because it's showing buyers are still present, right? Buyers are stepping in. We made another higher low from this retracement up. Now, if this was a red candle, then yeah, then you can say, all right, sellers are back in, and now we probably can ride this back down. But it didn't really give up. I don't think it really gave a good setup, or not an A+ setup to really kind of take that back down. I think if you would have done something like like if we just take from the FMOC highs down to like right here. I mean, we did reject from a Fibonacci level, but I really like the 50 and the 6.18 if that was the case. But I don't really play Fibonacci, so I haven't found a successful Fibonacci trader. So, but it is sometimes helpful to kind of gauge if you get some confluence with some other things. So, we did kind of retest this wedge, and then we gapped down, and then we just got brought right back up. And then we kind of this I want to say this candle here. We opened right at the EMAs, right? We already crossed over back here after the FMOC, right? Perhaps your opportunity to short was on Fridays, as we're right opening up at these EMAs, and then we shot back down. So I think that's how that candle went. Let me see. That was Friday. Let's go to a 15-minute chart. What day was that? That was Friday. Where we at? Where we at? That was Friday. So it was this day right here. So I mean, it's not really. I don't really see a clean setup. I mean, this is looking at a 15-minute chart. All right, was it that Friday? Oh, it's this Friday right here. So yeah, so like on a 15-minute chart, right here, where we gap down, we tried to retest the EMAs like right here, like 598, 597, 15-minute ORB broke down, right, and we kind of just broke down. We're back here, really at a critical level is 580. I think if we break 580, you'll probably definitely get a gap fill, and I want to say this is a trend line down here that we probably start to tap. So, I mean, there was nothing really here. Again, and this is the reason why I kind of say, like, just be careful going long after we have, like, a big wedge drop. It could be a little tough to trade to the upside, 'cause a lot of things kind of fake out a lot. So, I mean, that's really much what I see right now. Let's go check out the weekly. We got what, 2 more days. The market's closed today. We got Thursday and Friday. Perhaps we come in here and tap the Tap the EMA 20, which we haven't touched since September. That's really like it's major defense for we start to really break down, and I think that would be more of the shorter term trend for right now. But just again looking at the daily, no inside candle, um, from Monday, finish more near the lows, right back here from these this election run up, right, the election gap up, made a higher low. We're right back there, and there's your line in the sand, pretty much right here. All right, it's clear. It's clear to see, I would say. Um, so yeah, I think that's what I see on SPY. Long perspective, I just don't really see it. Perhaps this maybe we need like a week or two to start forming another higher low. Looking at it from a weekly perspective, but I mean we're probably going to need to get back above 590 for us to get back up into the 603 and all time high. So that's really what I see on SPY. Let's go check out QQQ real fast. QQQ is right here at the weekly EMA 9. Actually a little bit below it. Again, this we haven't touched this EMA 20 since September as well. Go take a look at the daily real fast. Right here at the 50, big level, right? We're kind of back at her at the 50, and same thing again that I talked about was what you could probably see is some sort of flat flag pattern back into these EMAs, and yeah, we got it, but it wasn't really clean, right? That's pretty much your flag right there, but again, it's not the cleanest to really take, so not something that I'm really interested in taking. After that, we gap down, opened right at the EMA 9, so down, and we're kind of back here near these lows from Friday, the previous Friday. So let's just go ahead and mark that off. These lows right here. So we're sitting around like a 509.30 or so. We still have somewhat of a gap to fill as well from the election. Not as a big as gap as you would have thought, compared to what SPY did. But yeah, that's pretty much what we have here. And again, we've just been trading in this up channel for quite some time now with an inclining 200 since these lows back here from December 22. So pretty much since the end of the bear market, I would say. All right, 2022 October, right, December, right, since the end of this bear market, and I kind of adjusted this line a little bit. I could probably, and I'm using the close. I think the close is more important than like when you're setting your trend lines. The close is more important. You might get more an exact entry using wicks and candlesticks, but I really like how what I can see here on this particular trend that we got up, right? It's kind of wedging, right? But it doesn't really. It's still wedging, but it really starts to wedge more up in here. Right now, I would say we're just kind of trading in a channel. Or yeah, from a technical perspective, that's probably a wedge. We can say that. So again, sitting right here at the 50, this is definitely a major defense area for bulls to step back in. Perhaps this is going to be showing a double bottom. A lot of people like to call out the double bottoms before they happen, but for it to really be a double bottom, we need to see that W shape form, and then we kind of break this neckline right here at 530. Could you get a little more? Could you get maybe take a stab at some things, right? Maybe you want to try to take a swing at QQQ, right? If we open up Thursday and we start to push away from this previous low, and your stop is 509, fine, right? You're only risking $2 or so, right? Perhaps you can take that, and that makes a lot of sense. If you want to buy dips when we have a rising 200 as well as a rising 50-day moving average, so I'm not fully bearish yet. The 50 on the, just back to the SPY, the 50 on the SPY is starting to flatten it out. So perhaps this starts to roll over, and that would have some weakness, perhaps in QQQ, because they do have some of the same holdings. But honestly, just nothing really here yet until we start cracking these lows. I think if we crack these lows, you can probably get a nice move. Honestly, I think a lot of people are looking for that. Just like from like a trading psychology perspective, you are able to kind of inverse your thought process when to go long and when to go short. It'll help you out a lot. Like if we just invert this chart, a lot of people will look at this and say, "Oh man, that's hot." Right? Say if this was an uptrend, right? Let's just look at this right here. If this was the uptrend, instead of these, rather these candles being red, say if they were green, all right? This is green. Then we get the pullback, and then we breach back above the 20, the EMA 20 and the EMA 9, right? And now we're kind of retesting this previous pivot, right? A lot of momentum traders will take this for a breakout, right? And that's the same thing if you wanted to trade to the short side. A lot of momentum traders will look to take this to the breakdown, all right? Because there's selling happening. So that's pretty much what I see there. We'll just do a quick little look at IW. I'm not really going to go into it. As you see, I don't really have it marked up. We're below the 50 day. The 50 day is curling down. And, this is probably one of the cleanest ones, but, it didn't really give you much of a move. I would rather this candle be red and not as large so I can risk even less. But you kind of see, right, we're rejecting the 20, or what is that, the 9 EMA from below. We're rejecting it as they sit above. So that's pretty much there. I don't really have much to say about IWM. The 10, the 9 and the 20 is curling down the EMAs. We didn't even hold the 20 at all. There's not really much here for me to talk about. Yeah, I think perhaps we come back to 211 or so, maybe 200 if shits get a little. We know where 200 sat at. All right, we kind of tested this from like August of 2022 all the way through December of 2023, when we finally broke out, and then we started putting higher highs and higher lows. So trend is still to the upside, folks. That's the case right now. These haven't crossed over from a weekly perspective. And we go take a look at the monthly. Not the cleanest candle, right? Kind of I wouldn't say a bearish engulfing because we never even hit these highs, but that's a nasty candle right now. Let's go take a look at QQQ monthly as well. That's a doji at the top of a trend. I don't think I can even go back and find another doji at the top of a trend that we can just. We got some of like this. This is from 2000, but we'll just need to wait and see. Right now I'm not really aggressive to the long side. I have a short on. I tried Nvidia short. We'll talk about Nvidia. You watched my last video. I did have a good analysis on Nvidia, and it's definitely working. The trade I took in that was not the best. Right, this is a nasty candle. December is over, so that's how the candle start. Perhaps we put in another lower high and continue down, and perhaps we break out. We don't know. We just gotta we don't predict. We just react. We let the price action determine our next step. So that takes care of that. So let me go over this Nvidia trade. Really frustrated with myself because I was using a smaller time frame, and that's the reason why I got knocked out of the trade. Using a higher time frame, I would have had much a better entry. But something I didn't talk about this in my last video, but we're having I'm thinking we're gonna have like a 3-wave down type of thing, 1 wave, 2 waves, right? And this is the start of the 3rd wave down. And the reason I bring that up is because we noticed this, not specifically maybe on Nvidia, and perhaps we did if I go all the way back where you can find some 3 waves down. Perhaps this is one wave down, 2 wave down, 3 waves down, right? And then we get to go. So we've seen that before, where we kind of make these waves down. Well, I'm even gonna call this a 2nd wave down because we never made a lower high. I probably need to go back when Nvidia was getting smoked, you know, something like that, right? So one wave down, two waves down, three waves down, right? But this spanned it out over a much broader time period. But you can see the wave down that I'm talking about, right? One wave down, two waves down, three waves down, and then we reverse, and price starts to go higher. Now the thing with what's occurring right now is just right now what we're looking at on Nvidia. I mean, this has been occurring since July, and yeah, we're kind of putting in these waves down. I mean, this is I would say that one wave down, two waves down. No, this is not a third wave down. Even I made another lower high. Anyway, let me go back to Nvidia. So, so we've been putting these lower highs since the earnings, and I've kind of have these circles drawn out. And if you watch my video, I talked about us potentially retracing and perhaps overshooting the 50, and then having that next leg down. And that's kind of like what we started to really see here on Nvidia. Like this was the spot right here at that 4190 location, right, where we kind of overshot the 50, then we rolled down. I mean, this red candle right here could have been your trigger with a stop over that high. So 138, your stop is 141. You just have to go longer dated. If you try to take a 65-minute setup or a daily setup using shorter dated contracts, it's not going to work. That was my poor choice of what vehicle I chose to take this opportunity. Was looking at a smaller time frame and using shorter dated contracts. Because I talked about us having this overshoot, and I mentioned that this is a channel that has been trading in, and it looks very bear flaggish, right? We're below a flattening out 50-day moving average, which is your purple line, and if I just take off the hourly 20 and 9, right? We can kind of see like okay, these have already crossed over back here. With the 9 and 20 on the daily, we overshot the 50, and then we start to roll over. And the reason why I say that is because it was very similar to back here in November where we undercut it or we undershot the 50, and then we started to go higher. And that's kind of what we did here. We overshot the 50 somewhat, and then we rolled over. And I tried my hand Thursday. No, I'm sorry, this Monday right here. And the problem was that we gapped down, and I can probably show it easier on a 5-minute chart. That's Friday. Where we at? Right here. All right, I'm just showing this on a 5-minute chart. No, it was right here. All right, yeah, Monday. Sorry, not Friday. Right, so we gapped down because I talked about. Oh man, you can see it on it. I mean, I can see this on a 5-minute chart. I know what it looks like on an hourly chart, but you can kind of see we're just flagging right there, and then we gapped down, but we gapped down right into this trend line that I talked about. And I haven't touched this trend line. We gapped down right there, and we got brought up. Right, some people were probably covering. Some people were looking to, take this trend line long, and I want to say I tried my hand right after this. So right after we got that rejection at Friday's close, I waited until we made this higher low right here on a 5-minute chart, and my stop was high a day, and I got stopped out. And I'm looking at this, and I had this trend line draw. I said, man, shit's about to go. And that's the thing. Like sometimes you don't have to wait until you get stopped out to take the trade. Like when you see it building out, you see what's occurring, just get out the way. I mean, I let it run, but perhaps I shouldn't have let it run because I was using next week contract. I think I had the 136 contracts, and those lost about 30%. I took the loss, and I moved on. But I mean, that was kind of the look I seen. Like once I seen that build out, I was like, oh man, this thing's about to go. I need to get out its way. And I think for me, if I would have been looking at a higher time frame, like a 65-minute, for example, there's no reason for me to take that short. right? There's no reason to take that short looking at the 65 minute. Where you can get short at was right after here, right? We get some stalling right here at a flattening out 50 day as we break these lows. I mean, that's a solid risk to reward. Right here, right when we break these lows, you take the contracts, put your stop here, risking 99 cents. You're risking like one delta, $50 maybe, if you got like at the monies or $5 or next strike down. Maybe risking like $50 a contract, right? And you targeting previous low. This is 5-to-1 risk to reward. I mean, you can make your mind up wherever you want to go, right? It offered it's a great opportunity. If you wanted to take it down to like this trend line, it's a 3-to-1 risk reward. And I'm pretty mad at myself because I seen it at the end of the day, but I wasn't going to trade it again because I already lost on it. And I'm not going to mess around with it again. But I mean that's hindsight, right? But I mean that's what I thought, and it kind of sucks to see it happen. Perhaps it sets up again. Perhaps we come back, stall again at the 50, or we put in another lower high. But I mean, right now I'm not really going to chase it. Yeah, I'm not trying to chase this right here. Maybe a day trade just take the break at 132 and see if you get like a big sell through there. And that's for like a scalp, but that is what it is. Rolls Royce. No, it's not Rolls Royce, but this is Rich Tech Robotic. I'm still in I got 1/3 of shares left. I don't know if I talked about this, but I mean, this had made a big move. Looking at the weekly perspective, right? Breaking this all-time trend, and the thing I like to think about is like where traders can get in at, right? So your first opportunity was this kind of like, we kind of break the EMAs, we break the 50 day, and then we pull back into the 20. Green candle hold gap up. I'm not really that good with buying gap ups, but this kind of hit 105. Then we pull back into a flattening out, looking like it's ready to curl up. 200, right? The 200 has been trending down. We kind of hold right here, gap up again, and this is like where it got my notice, and I was able to get this pullback around like 198 or so. And I think my stop was lower today. I wanted a piece of this. I felt like I watched it blow through 205, which is a previous area, 204, 205, right? Kind of blow through that, and I rolled this up to about 290, where I took off a good portion of my position, 3/4 of my position actually, and now I'm just going to manage the remaining shares using the EMA 9, because I'm in at 198. I want to give it to 174. I'm really turning the position red. I'm really just going to use this area right here. But I do like how it held 259, which was this previous pivot back up here. It held this location. Perhaps we can trade a little bit sideways and get some more continuation. Besides that, I am still in this FMSC. This is Freddie Mac. So I caught this right when Bill Ackman talked about it. I got my tweets or my X posts notifications on for Bill Ackman. I seen the notification come through, and first thing I did was look at the weekly, and literally when he mentioned it, this was triggering right here at 269. My cost basis was 272. I took some off up into here that same day. I was up about 25-30% on the position. So right now I'm just running with 1/3 of the position. I'm just gonna let this work. I'll probably give it a little more space because I might be looking to probably re-add if we can get a little bit, some indication of a higher low on a smaller time frame, like hourly, right? If we want to pull back into like 285 and hold, or I might re-add, because I think this volume here is something to be mindful of. And then you got Ackman talking about he's going to talk about it beginning of January. I definitely cut this Rivian around like not even 1350. I just seen it was struggling here at 1430. Like I got in right here this day as it held. I pulled back into the 20, and we kind of held. And I was like, I'm gonna take it over the highs. and we started getting in the move. I had the 1450s for, I want to say, January 17th. But man, we just kept stalling out, stalling out, stalling out. Actually, no, I took it off of this hourly. I remember where is it at? Where's it at? I took it off of this hourly pattern right here. Yep, right here is where I took it. Right when we started to break, that's when I took it. At 9:30, we started to break these highs. I probably should have got in right here around 1390. But man, I was a couple cents off. I took it around like 1413, and it just kept struggling up here at 1430. All right, and then you can see even Friday, even though it was up 4%, 5% candle at the open, and then it rejected the entire move. I want to say for me, if I got in right here, I definitely got out around here around 1360. Probably this day. I might have cut it the day before. I can't remember. It just wasn't working. There's no point for me sitting in contracts, getting slapped around by data with 2 3 weeks left, and it's just not working. So I leave that alone. Perhaps this needs a deeper pullback. Let's just go check the weekly. Yeah, not the best weekly candles you want to see. All right, a lot of volatility in these candles. I mean, low volume pullback, but the candle formations is just, I don't like it. I don't like it at all. What else am I in? I'm in this docu. Um, I'm trying to figure out. All right now I have the 90 puts for 117. I already took some off. I want to say around like 25%, and then I have the runners, and those are going. Those are around 70%. The issue. I wouldn't say the issue, but what I thought about this was, well, first, honestly, you just back out. Like, this thing went vertical. This is a 55% trend. I think that's unsustainable. If you look at it, like, that's pretty much unsustainable type of a move. I mean, from this breakout, I mean, this stock went almost 90%, 95% or so. That's a pretty big move, and it literally just been mooning, like, from the beginning of this trend. We can say, I mean, it was up 93% in a matter of 3 months. I didn't think that was. I felt that it could potentially drop, and I think there's some more room in this. I just think I probably want to um, roll out and perhaps roll down on my contracts. Maybe take the 85s for February, give myself a little more space. And by rolling down and rolling out, what I'm looking to do is use that money, that profit that I have as a credit to buy the next contracts. So say if the next contracts are 305 and I'm up about $100 on these contracts, now that contract I just bought is only 205. Allow me to use that credit and just kind of see if this play is going to keep working. So we had this wedge drop through the EMA 9. We retrace it right back up into these earning gap up lows, and we kind of stalled out right there. And I kind of set my alert right there at that candle's low, and this is why it's important to use a 65 minute, because if I would have taken this trade um, when it had broke the initial time right here, let me just open this up. If I would have taken this trade using the 65 minute, I mean, not using the 65 minute, I wouldn't notice that, hey, we opened down here, we opened below this level, and they brought it back up. So once I seen that, I was like, I'm not interested. I'm not interested in that. I left it alone. But I kept it on my radar because I felt this was a pattern that needed to be looked at. Couple ways. There's a couple ways you can look at this. Right, you can take this 99 down the right here. We can say, okay, that's our break point. Well, I mean, that takes us down right here into this 87.81, which is sitting right around the weekly EMA, right? The weekly 9 EMA, right? Perhaps it pulls back to there, and people can start getting long. I don't know, but I think that was the case when I was looking at it, and I was like, I like the look. Another way we can look at this is just by taking the whiff of this particular move. Um, and taking it from the breakout, well, I mean, it's hit its target. So I'm going to manage this using the 65 minute. If we gap down on Thursday, I might look to roll out and and see what happens. But perhaps we can get a gap fill, or right, we can get a gap fill back from the earnings gap, or maybe we tap to 50. But what I'm trying to do is be patient with this move and let it build out. Right now, looking at the 65 minute trend line, which are these darker lines, your pink and your blue, right? We're trending down these, and we haven't crossed them yet, right? And perhaps I probably should have re-added here at 92.27 as we got that reject. I probably should have re-added with a stop above that candle's high. Um, well, that probably would have stopped me out. I don't know what this looks like on a lower time frame. Um, Cause that's your rejection right there. Well, no, this is your rejection. Yeah, I probably should have reacted on the morning open. Um, but yeah, that's really about it, man. I'm not really in anything else. I'll probably go through some scan. This is probably a longer video than the normal. Hopefully, if you did sit through and you watched it, you kind of get an idea like what I'm looking at the trade. And we'll see what happens. Oh, I do want to mention this. So like I know like people been talking about the breadth indicators, and I noticed that, and I was like, yeah, I mean, there's some divergence in price. I called that out before. I don't even have to mention that or showing the evidence of that, but yeah, I know like the stocks above their 50-day are at 24%. I mean, when we back in April 2024, I mean, we still had some room to go down. Um, Back when we bottomed in, last fall, we were down here at 12%. So we still have room to go. From looking at it from a 50-day perspective, there's still some room to go if the market wants to continue to kind of do what it's doing. Like here's the 50-day on the SPY. Um, Last time, back in November or October 2023, we're down here at 10%. Like those are like good buy areas. Like you want to like add to like your long term ETF positions. Those are spots. Anything below 9%, like load the boat. Like when you get down into these levels, right? This is 23, like I said, October 23, November, and here's like 2022 of October, right? This is where we had the end of the bear market, right? And this is where we're at back in that June, and then all the way down here, at 1%. I mean these are COVID levels, and these are 2018 levels from when Jay Powell said some shit and collapsed crypto and everything. And then you have like I forget what this was. I think this was like the China fear, but then 2009 was or maybe the banking issue re-fear. But then you got the great financial crisis from 2008. Where 0.20%, 0.2%. I don't know. I might not be saying my math right, so don't judge me. But the shit was low. It was under 1%. It was 0.20%. I may be saying it wrong, but yeah. So I think what I'm saying is like we can go lower, people. We can go lower. Like even like if you look at the 200, like there's still 50% of the stocks above their 200-day moving average. So although it looks bad, like the market's been, I mean the breath has been kind of rolling over. When you look at it like stocks above their 20-day moving average, right? Stocks have kind of been rolling over a little bit, right? We've been not really making a new high, but you can't get above 100. But just overall, we just didn't really see it on the. I would say we didn't see it, but perhaps we see a deeper pullback, or perhaps you get bought up. I don't know. I'm not gonna sit here and act like I know. And anyone that does act like they know, they don't know. No one knows shit about the market. Um, all we can do is just follow price action and go from there. Any stocks? I mean, I just got back today, so I haven't even seen what the market closed. Like, I ain't really see what stocks closed at for the most part. I'm pretty sure since the indices are below their 9 and 20, that perhaps we're going to probably see a lot more of short looking setups, and a lot of people don't like to take stock shorts. Um, and that's fine. I mean, if that's not what you want to do, then no, don't do it. But for me, I wouldn't say I want to be a trader of all things, but um, I don't mind trying to take things short when it presents itself. Here's Tesla, cracked the 20. Um, they probably need. I mean, it's 4 days down 4 days in a row. I don't know if I really want to touch it. Maybe get a retracement and then rolls back over. You see like perhaps like let's see what like some of the software are doing like CRM. Let's see what Salesforce looks like. Um, all right, wedge drop, pull back right, and this is why I explain what I'm talking about. This is a perfect example, right? Unfortunately, it gaps down, but even when it gaps down, it still gives you that opportunity where you could have took this short right here, right? Every test is right there. You say, all right, I'm in right here. That's my signal, and my stop is here. Ooh, $4. I don't know if I want to take that. Not $4. And I don't think you really get. I mean, you're getting a 2-to-1 risk reward. You're getting about $10 on that move. Um, but that's a lot. You might have to tighten up your stop, probably above the 20. Yeah, right above the 20 perhaps. I mean, $4 is a lot on contracts, or maybe you just buy one contract where it's $200. Again, thinking that delta is like 50. So I mean, I'm pretty sure that, I mean that's probably what we're seeing. We're probably going to see on a lot of charts. And this is my first time really looking at them. That was CRM. Let's look at Duolingo. Yeah, yeah. I think we're gonna have to kind of. I'll probably sit this out for a little while. I know I marked up IBM. Thought I did. Oh no, this is a while ago. Um, Kind of giving a double top look, but not really. Flag, but it gaps down. Yeah, we gotta wait this out, man. We gotta wait this out. Let the charts still build out. Wait till the juniors get off the desk. People get back next week. Um, let's see what the market got for the new year. Oh, I do want to look at this Moderna though. I know it had relative strength on Friday, considering what else was going on. I mean, most of that sector did. I mean, it's kind of in the bio space. Let me see where did bio finish at. Just looking at my sectors real fast. Bio. Which one is bio? Should be like IBB. I don't have a bio here. All right, let me check here. Then. I know I got a bio. It is IBB, so IBB should be here. Add IBB. We just throwing IBB. So IBB was green that day, so maybe it was just what's this? Consumer staples was green. Materials kind of green. Um, XLK, where's XLK? That was red, down about almost 1%. So maybe this is just the sector having some rotation. But I mean, I'm not worrying about. I mean, this volume looks crazy, right? But that was OPEC, so who fucking knows? But I think like what I want to be mindful of about Moderna was that it's right back at this previous breakout spot. Um, Literally right back at this location. I mean, that's this high right here. This candle high was $36, right? And it pulled all the way back down to $20, right? I mean, let's just do the math real fast, right? Down here, right? This lost about 45% pullback, and then it rips, and it just goes on this crazy run all the way up to almost 500, and now we are back there. The low of this candle is 35.80, 20 cents off. All right, 20 cents overshoot. This candle low right here, 35.36. 4 cent overshoot from that 36 spot that we just looked at. And I wonder if this is going to start to build out. And if it does, I want to get a piece of this. Because this was just $170 back in May, last May. Or you could say in July, this is $100. This is a double. Like these are small entries, and I would take shares with a stop below this 36 spot. I would take shares and just let it work. Let it work. You get to $100, take all half. Now you got a free investment, right? Now you got a free investment. Perhaps it gets back to 500. You just flipped it from $40 to $500, right? Buy 10 shares. You buy 10 shares. You put $400 in. This goes to 80. All right, you just take your $400 out, right? It goes to 80. But it goes to $80. You take your $400 off. You still got 5 shares. It goes back to 500. You just made $2,500 on your remaining position. You just made $2,500 on your remaining position. You probably made like $3,000. You probably make more, close to $3,000 off of $400. I mean, that's good risk reward. You're risking what? I mean, it's sitting here at 41. You're risking five. You're risking $50. Those are the type of winners you can get, man, if you're patient. Right? This be 300. You'll be up 300% from here. Jesus Christ. I think the risk reward is here, man. With this Moderna, I know, and the reason why I'm saying this, I was in it at 41. Then the news came about them getting tossed out of the Nasdaq, and I just didn't want to go through a gap down with it, and didn't know how it was going to respond. However, it's actually been responding pretty well. Once that news was announced, it hasn't really sold off the way I thought it would. After being kicked out of the QQQ. So there's I think there's some buyers in here, and I definitely want to see what happens. And again, this is a low video. Perhaps this isn't for everyone. Perhaps it's just for me. I really don't give a shit. I think me doing these videos has been helpful for me, and it's something I want to continue to do, and something I want to definitely do moving into 2025. Just talking to the markets, talking about what I see. Having my thesis, having my thought process, speaking things into existence. I don't know, some shit like that. Microsoft. I don't know why people trade Microsoft. It's one of the choppiest trades since for a while. I mean, if you've been trying to trade just since August, good luck. And the reason why I say that, you can see it very easily when just looking at the moving averages and not the price. Look how choppy that is. Like, let me just take off the 50 and let me take off the 200. Look how choppy that is. There's no trend here. Crossover, 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 crossover. Very similar to, let me go back here on snow. And the reason why I barely trade snow is just it's a nasty chart. Back here. And look at that. Just crossover. It was disgusting when you looked at it. And I was like, man, I can't trade that. Look at that fucking chart. Look at this. How do you trade that? It's just chopping back and forth. And now what we did, we kind of put in the bottom at 107, right, trending up, and now we're kind of back in that chop zone. We never really got out this bucket. I don't know what the fuck's up with this company. I mean, ever since the CEO left, the two CEOs, like the two main guys, they just haven't really performed. And I think that was earlier this year. He left. They left. This weekly's not bad though, considering this earnings move back up. I mean, what you would want to see is, again, I play off the moving averages. This is a big move up, right? And now we are just flagging back into the EMAs, and we're looking for continuation. So, I mean, I think the weekly, we can keep this on look, even down to the 20, get back below the 20. Take it off your watch list. There's no point to look at it until it gets back above the 20. It probably needs news then to really get moving. But, I mean, we got 2 more days, right? So if we have 2 more days left on Snowflake, this is a low volume pullback. I mean, but it is December, but who cares, right? That's what it is. It's a low volume pullback. It's shown here. I didn't even hear hitting our average of 34 million. Like very, very, very low volume pullback. Say if we pop and we finish at the highs up here. Well, this candle is now going to be a green candle. All right, this is going to be a green candle with a lower wick. Right. The next week we open up. Say if we open up in the middle of this range, and we break that candle right here. Your stop is right here, 149. How many shares can you buy? Depends on your account size. All right. If you're risking down to 145 and you're triggering up here at 155, right? You want to let this play out. My stop is right here. Risking $3.73. I can buy 10 shares and risk $30. I can buy 20 shares. Well, not $30, but like $37. But I could buy 20 shares and risk about, what's that for? $74, $84. My math might be off. It's the beginning of the year, people. Right? And my target is back up to these highs. It's a great risk to reward. It's a 7-1. Goddamn. Get about $28. So you can. I want to risk all the way down to 20. But yeah, I'll risk. Yeah, you can risk there, right? And if this works and builds out, man, it's not bad. It's not bad. I think it's something you gotta keep on looks. From a daily perspective, you don't like that it kind of took out this earnings gap, or this earning gap up lows and get gap down 2 inside days. Perhaps it's an undershot of the earnings gap down, a gap up. We got a long way to fill the gap, but again, very, very, very low volume pullback. That's kind of what you want to see, and we kind of see, the spikes on up volume more, for the most part. But yeah, I'll have to probably look at this a little bit more deeper later today. I'll probably do another video. Who knows? It's the new year, right? New year, new me. We'll see what we got going on. But yeah, I'm coming up on an hour now. I haven't given any setups that I really like. It's my first time really looking through it, so I know this Oscar, when it goes, it goes. I had a very interesting spot, right? But man, it looks down so much, man. You got to give this thing some space. You can't be squeezing your butt cheeks, trading this one. You gotta open it up. Pause. But that's crazy. But yeah, this thing, man, when this thing is gone, man, like 13, this thing would be $18 and won't even blink an eye. It can happen very, very fast with this stock. I just know that for sure. Earnings is not till February. This thing I'd love for it to trade sideways into earnings. And then get that explosive move. That's gonna look like a accumulation stage. Right now it looks like a double top. But broke down. I don't know. Probably not double top. Just rejected at the highs. Neckline's right here. It broke it. Never got the full measure move. But yeah. Oh, that really broke this. Anyway, here though. I already broke 1930, but yeah. I don't know, man. I gotta wait and see how things build out. I do want to take a look at some sectors. What can I do to do that real fast? Let's go take a look at some sectors real fast. That's what we're gonna do. We're gonna take off all these moving averages. I'll do that. Now I'm going to go back up to. What's just a quicker way I could compare all of these at once? Is there a way I can compare all of these at once? Right, because these are all my sectors. Add symbols. No, that's not gonna work. All right, so let's do this. Let's do this real fast. What we're gonna do is we're gonna just look at some of the. We can look at interest rates. If do y'all follow that? Interest has been trending up since September. I mean, you already know like, when we get above five, should get real. I mean, this is the 20 year. I don't care about it. It's really the 2 and the 10. Uh, See what the two doing. Two kind of in a little double top, little double top look. We had these higher lows forming back here, rejected up here at 499, 4.9, around that 5 location that we talked about. We had this, like, that was the kind of peak up here back in 2023. We peaked up here back in March of 2023, December. We haven't got there. So, I mean, trend's been down, right? Feds have been cutting rates. Um, Shorter term trend is up. Who cares about that, though? All right, let's do this real fast. Let me just do my let me do my sector look. See if we see any rotation from last month. So what we're gonna do is we're gonna go to IYR. Then it's gonna add everything to the same chart. IYR. Click here. Go to this chart. Then I'm gonna hit the plus symbol. We're just gonna add these other ones. IYT. We're gonna hit this with the new price scale. Nope. Yep, perfect. All right, so that's what I wanted. And I'm gonna move this. 'Cause I don't need this up. And we're gonna turn this into a line chart. All right, so we got IYT, IYR. Let's throw on some solar. And what I hit? I hit new price scale. All right, and let's throw on some XHB, home builders, XLB. I don't like that. It's going that one. I forgot how to do this. Okay, I think I gotta be that. All right. Yeah. Same percentage scale. Do that. Okay. All right. And I stopped at XLB, so let's do XLC. And I hate doing XLC because that has like Amazon in it. Kind of throws you off. Like, what the fuck is Amazon in that? Or maybe it has Google. I don't know. Some weird shit. XLF. IBB. Alright, we did see some strength in there. Let's do XLI. XLK. XLP. Same percentage. Anything else? Oh yeah. I have real estate already. I think I already have a real estate here. Yeah, that's real estate. What's this? I don't need 2 real estates. Right, they trade around the same, yeah. XLV. Healthcare. XLY. Seminary discretionary. And XRT for retail. Alright, boom. I need to save these as something else. I'll do it another time. Alright, so what are we gonna do? Let's do the last month. Alright, so over the last month, you're like, man, what the hell is all this, Chris? All I see is squiggly lines. So what we're showing is what performed what. What did what. Let's take off. We don't need volume here. We don't need none of that. Alright, so what did what? Has anything been really outperformed? We got real estate, which has been down just 1% since the beginning of the month. Really, what's been down is XLB, kind of making a bottom since the 30th. Like, what's trending up? Like, what's this right here? I don't know what stock is that. That should be real estate. Okay, so real estate's kind of made a bottom. But I mean, for the month, all of these been down, right? But these are been down the most. So let's do something like let's do let's do since like the 17th. That's probably gonna show me a smaller time frame. What's going up? XLV, which is healthcare, right? Yep, healthcare. Oh, no, 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 no. I'm trying to figure out what's the best way to do this. Yeah, the best way is just a month. I mean, everything's been down. Everything's been down. I mean, I guess the thing that's been least down has been real estate. Or what's this? XLY? What's XLY? Consumer discretionary. Consumer discretionary. Consumer discretionary. XLY. XLY. Which have you been doing since December? Back out a month. Let's make sure I'm not tripping. Okay. Yeah, it's been flat. It's pretty much. I mean, it gave up its entire move, but that makes sense because yeah, it's gave up its entire move. All right, so that's why it says down almost. Yeah, it's been flat. Right, and that was the XLY was this one. I gotta figure this back out. I forgot how I used to use this. I haven't looked at it in a while. Oh, it's right here. Yeah, it's been flat. It's been flat. XLY. All right, so it's been flat. Like what's been flat? So XLY has been flat. Um, Nothing's going up. Nothing's going up right now. I mean, for the last month, no sector is going up. I mean, that's the best thing I can fucking say. For the last month, nothing in the market has went up. I know there's no one particular sector that has went up. If you want to say there's a sector that has been going up, going down the least, I would say it's real estate, but it kind of gave back its entire move for the month. And this is what this is XLK, so it's down 1%, but it gave back its entire move for the month. So it's not really showing me what I want to see. What I want to see is like what's been going up. So maybe I need to look at like since the check out the first 2 weeks and go from here. No, I'm not really seeing it here. Yeah, because now, like now we see like XL. All right, because if I looked at it from the other spot, like XLY is down 5%, but on the other time frame I was showing was down, it was only down 1%. All right, so is this showing some sector rotation at all? I'm just not seeing it. There's nothing really trending up, man. It's gonna hide everything. See if I can kind of break down. Maybe all this stuff right here is just throwing me off. Let's see. All right. So this is real estate. Um, since the 20th, been putting in a higher low. I mean a lower high. I'm really trying here, people. Man, these charts are damaged. I'm done. There's nothing for me to do here. These charts are just wrecked. I mean, we have to wait until some things just really start to show its hand. Because I mean, like I said, for the monthly, I mean, okay, comparative to SPY and comparative to QQQ, this is making higher lows, right? So real estate is making higher lows as of right now. Let's do it. Let's do it. Let's look at it from that way. What else has been making higher lows? Still been making higher lows from its bottom, while the market It's sitting. It hasn't made a lower a lower low yet, but it looked like it's about to. Um, right, same with solar. Um, man, this home builders made a low back in. Let's go to a daily. I'm looking at that. Yeah, I don't know. Everything is fucking cracked. Everything's cracked, people. Look at it. Everything's cracked. What hasn't cracked look like it's about to crack. But I mean, this is just looking at a line chart. Everything's cracked as of right now. I need to see. I think this. Yeah, this has to build out a little bit more. I think we chop or we go lower. I don't see us going higher. What's this? It's Boeing. Relative strength. Yeah, there's just nothing really here. What's XLE doing? Where's XLE? Why is XLE not here? XLE is oil. What's oil doing? Why is that oil down there? Anyway, check out oil. Getting smoked too. Yeah. Yeah, this is much to do, man. Enjoy you guys' day. Enjoy your new year. I'll just have to wait and see how things build out. We'll go from there. Peace. God bless.